Mike Ralston, good to see you again. It's a huge day for the company. You've just announced your pre-feasibility study on the Orom Cross graphite project. Before we get into the thick of it, just remind everyone who you are and a brief company overview, if you don't mind.
Yeah, sure. So Blencowe Resources listed on the LSE main board. The ticker is BRES. We put this project into the company approximately 2 years ago, just over 2 years ago. It's a large-scale graphite project located in Uganda. We've always felt that it's world-class. We've obviously been working very hard over that last 2 years to bring it through a JORC resource phase of drilling, metallurgical test work. And as you say a minute ago, we've just completed the pre-feasibility study and announced those results to the market today.
Obviously, looking back on the PEA that you released last year compared to the PFS today, it seems like you've improved the economics, the capital costs. Basically, the whole thing looks so much more robust now. Can you just run us through the numbers just to begin with?
Yeah, sure. Well, look, we start at the top. I guess the NPV on a post-tax NPV is $498 million US, and the IRR is 50%. So pretty good headline numbers for any project. At the same time, and I think in the PEA we had about, I think, 317 million NPV. So we've increased it by nearly 50% or more than 50% since the PEA last year. And that's really to do with the profiling of the production and how we're going to basically stage the ramp up of production for the mine going forward. So at the same time, we had a $500 per ton operating cost. That's the FOB to Mombasa port. And that's remained pretty much static. It's not moved. I think we've gone $499 at the moment. We're $498 before, so it's literally almost exactly the same. The capital cost is reduced. We showed $80 million in the PEA last year. We're down to $62 million right now. And that's mainly due to the fact that we are looking to do a smaller plant as the starting position. And 800,000 tons at the beginning point, which will then ramp up by a further increment of 800,000 tons in year 3 and a further 800,000 tons in year 7 to ultimately be 2.4 million ton plant. And by doing that, we'll be ramping up production from about 35,000 tons of end product to just under 150,000 tons when we're fully ramped up and operational. So yeah, it's a lot more profiling. It's a lot more work. It's obviously gone into all the different facets of the costs, etc. We've been helped by the fact that graphite prices have shifted upwards. That's definitely helped in the past year, and they seem to be on the rise again. So that's obviously good for us. But overall, it looks like a very, very robust project, and we believe that we can appeal to the market in terms of funding and funding partners. There's obviously some next steps that we'll talk about in a minute, but it's something that we always believed had the capacity to be a world-class project. And I think these numbers are starting to show that it's definitely in that sort of category.
Obviously, this sends a message to the market that obviously this is a project that essentially is financeable, does have a stage gate production method. Just wanted to look a bit more forward now. Obviously, a lot of companies, when they get to this stage, now need to start thinking about their permitting process. You've already got your permits in hand, so I assume you can now push on and actually start delivering and go into production next year like the plan always was.
Yeah, the plan at this stage is to look to do what we call the stage 1 plant, which is essentially a small-scale pilot type of plant for around about 1,500 tons of end product per annum. We're going to try and get that up and into operation by the second half of 2023. So we're really embarking literally from today with what I call a pilot study, which is trying to determine not only the capex required for that plant, but all the infrastructure relating to it and the working capital requirements associated with it, because you'll appreciate as a very small plant, it's not necessarily going to be profitable. So that pilot situation or the pilot operation is really about pre-qualifying the sales of our end products into end users so they can understand that we can mine it, process it, and ultimately deliver it to end users over a period of time from the mining operation in Uganda. So that's the next step. We've obviously got to look to fund that. And then we'll be moving from there as we complete the DFS around about the end of next year towards making a decision to mine on the main project with a view to bring that into production in 2025. So yeah, we're definitely moving towards production from here. Obviously, there's got to be a set of board decisions and go forward positions from there, but there's nothing that's stopping us. As you mentioned before, the mining license is already in place. So we really just got to keep moving forward and keep the momentum that we've got.
Can we just touch on the sort of capital costs in terms of your all-in sustaining costs? You were talking about the 498 mark there. That would make you one of the lowest cost graphite producers in the world, wouldn't it?
Look, there are definitely other projects that can show lower costs. I think everybody's got to appreciate that you don't literally start at 498 and produce at that number for 14 years or whatever life of mine is. You'll start at a higher number as you've got low production, and then gradually you'll ultimately get to a much lower number than the 499 by the time you achieve that full scale 150,000 tons. So when we talk about that number, it's an average over the full life of mine. And there are other projects worldwide that will probably produce more than 150,000 tons and ultimately might be able to deliver that at a lower cost. I'm not really that fussed. It is definitely one of the lower cost projects. All I'm really worried about is our own project and to make sure that we've got enough margin within that operating cost, obviously, in order to pay back any capital that required to build the plant and ultimately to make some profit.
All right, well, let's talk about margin. Obviously, if that's your cost in terms of your profit, so what's the weighted basket price that you're using at the moment, and what are the profit margins looking like?
Well, the weighted basket price of our particular products right now is about $1,270 per ton. The forecast by our marketing experts tell us that it's going to be just over $1,300 a ton by 2025, which is the estimated time that we'll be bringing this first production into play. So 1,307 is the number that we've used. That's our headline number for the basket. And then we believe that that's going to increment over time going forward. And I'm not talking about inflationary incrementing, I'm talking about demand incrementing. So the more traditional usage of graphite probably won't move up that much and will probably stay pretty static in terms of pricing the coarse flakes. But for the smaller flakes, which are used in the lithium-ion batteries, those prices are forecasted to rise. And in some cases quite significantly, because people are obviously seeing there's going to be a deficit of supply against demand. So, yeah, we don't really know where prices are going to go here. We're obviously trying to find a happy medium where we're not too conservative, but at the same time, we're not too aggressive, so that we can ensure that we put our best foot forward, but at the same time, as I say, not too aggressive. And I think with $1,300 a ton against a $500 operating cost as an average over life of mine, there's plenty of margin.
It's interesting as well that obviously we're in this period at the moment, we're seeing precious metals sort of fall in price. We're seeing some of the base metals perform essentially, well, really not as great as they were, say, a year ago. But graphite seems to be holding up okay, doesn't it?
Yeah, it's a very interesting one, as you say, because on the one hand, we're just not seeing the end users driving hard into the supply chain to lock in future supply of what's going to be a key ingredient or key input into their gigafactories that are essentially going to churn out the lithium-ion batteries that they so require. I think there are over 300 gigafactories in various stages of commissioning or on the drawing board, but 300 is a huge number, and they're all going to require together an enormous amount of graphite going forward. And yet, with all of that investment into these factories, as I say, we're still not seeing parties driving one stage further and saying, where am I going to get that graphite from? So I think that there's going to be a lot of activity in that particular market or in that particular sector going forward. And we want to be positioned as one of the companies, not only on paper that looks good, but actually being seen to be moving towards production so that they can, we're de-risking along the way. We've obviously got a mining license already, but just to ensure that when that demand supply in equilibrium or deficit starts to kick in, we're positioned very well to take advantage.
Good. Obviously, we did do a video about a month and a half, 2 months ago in May. We did outline sort of all the major milestones that should be upcoming. But for those who obviously haven't watched that, I would recommend it. It's around a 25-minute video. It gives a really good overview of the whole company. But for those who are less familiar, again, with that video, maybe just, obviously you've got the pilot plant study going on now. I assume that will be going on in the background, and then you'll be able to make a decision on that, hopefully start production in mid next year. What else can we expect in the meantime whilst all that's going on, and even further afield, I guess?
Yeah, well, there's quite a lot of work going on already as regards end users and the offtake. We are in the process of sending out technical data sheets to various different potential end users. They're having a look at it. We'd be expecting to get feedback from them. We've got a lot of the core from the work that we drilled earlier, or from when we did our drilling last year, which we're going to be getting a whole lot of bulk samples, around about 70 to 80 kilograms of bulk sampling. That will be ready in the next 2 months or so, and we'd be expecting to send those samples off to end users so they can do their own test work. And ultimately from that, if everything goes to plan, we would be expecting them to ask us to provide more samples, bigger bulks, etc., that we could either provide from the pilot plant next year, or go into a further drilling campaign to deliver to them earlier. So there's a lot of sales and marketing work happening in the background, because it's obviously a very key component. And then in the foreground, we're going to be doing this pilot study. We're going to be understanding exactly what the commercial dynamics are, capex, opex, etc., and the funding requirement. And as soon as we know that, then I'm going to be going out there to have a look and see how we're going to fund that, with a view that if we get the funding completed by the end of this calendar year, we want to get this up and running by the second half of 2023, so that we're in operation, delivering mining, processing, and delivering graphite. And we'll probably be looking to do that for a period of about 18 to 24 months in parallel to building the main plant and all the associated infrastructure, so that by 2025, when the main plant is ready and up, then we'll obviously have had 1 to 2 years worth of sales into end users, and we can ramp up to that 30,000 ton starting position in terms of our production capacity. So yeah, there's a lot of work going on in the graphite. For those that are not familiar with the company, we've got an exploration nickel project literally 150 kilometers away. We did some airborne electromagnetic work about 6-7 weeks ago. Those results have now come through, and we're getting some experts to have a look at that with a view to identifying further drill targets. So there may be a little bit of news flow and further work that we're going to do on the nickel as well. But our primary focus is going to be on the graphite. We're hugely comfortable and very excited by this pre-feasibility study results. And obviously we want to just keep that momentum and probably go out there and start looking for some partners, whether they're strategic partners at a corporate level or at a project level. I don't know yet. But there's definitely a lot of interest in the graphite space for the right companies, and we think that we're very appealing. So yeah, we're going to be doing some work there as well to just try and find who are the best parties to work with going forward.
Perfect. All right. Well, I'm going to place the PFS in the description below, and also a link to the past video. But Mike, it's it's one of the best studies I've seen this year. So congratulations, and great to catch up.
Thank you very much. Appreciate that. Thank you.